Hello, hello, and good morning to everybody, and welcome to Behind the Markets. I'm your host, Munyumba Mutwale, and we'll be joined later on by my co-host, Vernon Chitifi, about uh, as we gauge into this final one of the week, which is the 24th of March, 2023. Remember that this is the final week. This is drop-off week, and we are waiting for a bit more activity. I think Vernon should be joining me any minute from now. I think we have him now, or we will have him now, or anyway, uh, at this moment, we will have him now. Good morning to you, Vernon, and how are you doing?
Hi, good morning. How are you?
Good,
I'm
good,
well,
good. I hope we
thank you. I'm
haven't
doing
caught
fine. How are you today?
good, good, good. Hopefully, we haven't caught you on the wrong side of things. So today we will be covering quite a bit. We'll be going through the market roundup as usual. We'll be going through our daily deep dive. One of them is British American tobacco results have actually come out. I'll be going through part two of the results season, trying to talk about value stocks. Has value investing done well, or is there value of value companies are doing well in terms of the intrinsic value? So let's take a look at how the market is doing in terms from a value perspective. And then we're going to go into our chart of the day, which is going to be a part two, and I'll talk about entrepreneurship and the changes that we've seen in terms of entrepreneurship in society. And finally, Vernon, we're going to be able to talk about our topic of the day. We've been talking about plan your money, plant your future. But I want to talk about also the future that is coming. Okay, what future should we prepare ourselves for? That is a question we need to talk about from a career perspective, because I think we're having a lot of perspectives, yes, about financial future, but Vernon, there is very little future if we do not have a work-based future. Okay, if we haven't figured out how to have a work-based future and a social future, because a lot of our social lives and our social structuring is actually pinned on what kind of society we're in, and then most importantly, what kind of economy we operate in determines what kind of society we operate in. So I want everyone to try and buckle in for that conversation, because it's going to be quite interesting today. But first of all, let's touch straight down into the markets, where we've seen once again it has been another day of the kwacha losing value. It has continued to be quite a roaring mess, unfortunately, with our currency. Now, we were hoping to see that maybe the oil industry might actually experience some change that might bring forth a slowdown in the loss of our currency. But unfortunately, Vernon, yesterday it did cross a very important threshold. The kwacha crossed through 21. Okay, now in some countries that's legal enough to drink. So there are some countries where 21, I think in the US, 21 is the legal drinking age. I know Zambians couldn't be able to handle that. Having to wait till 20, we can't even wait until 18. We're struggling with that one as a country.
Mm.
Now 21, because Chakola United they already get started. No, but seriously, but it actually is true that by I think by what's it between 15 and 19, one out of every four boys is already drinking. Okay, between 15 and 19 in Zambia,
Absolutely.
that's World
It's
Health.
too early.
One out of every four boys is already drinking, and in fact, 10% of boys are chronic alcoholics between 15 and 19. Well, not chronic. What I mean is they're alcohol abusers. Let me say, not
Mm.
alcoholics, but they're alcohol abusers. In other words, they get smashed like regularly when it comes to alcohol. Right. So now 20. So we have seen the kwacha go up to 21.0419 yesterday, up 0.56%, up 2.15% on the week, and up 16.27%. So it was a really accelerated week. We've seen the kwacha go up 2% just in a week, up 7%. This has been the fastest gains. The kwacha has been moving about 4%. This month, it's moved 7%. Okay, that's a huge movement, unfortunately. But there is something that obviously that is just one of the main trends that we will start, but we'll go into how the rand has been doing and various other things on the other side of 60 at 60. But we just wanted to introduce to give everyone that yes, the first news is that the kwacha has turned 21. Drinking age, people. Not yours, but the currencies. And it is acting drunk, actually. We'll catch up. We'll be back on the other side of this.
Absolutely. All right. So we had actually stepped out for a quick one, and welcome we are back again. And thank you so much for still having stayed tuned. Our audience online, thank you so much for still, sticking around. Mutwale, go ahead.
All right, so let's get back to it as we did see that yes, the kwacha has turned 21 and is wobbling a bit, so we can see it's indulging in the currency mess of the global economy. We are seeing that the rand also moved up 1.65% and has also had a very strong week. The rand is also up 7%. Now that's very dangerous for us because remember we get a lot of our imports from South Africa. So when you start seeing the rand getting stronger by 7%, that means that the things we're going to be importing from South Africa, which is about 35% of everything that we import, is going to be affected by that. In fact, you have to look at it in terms of how China is doing, how South Africa is doing. So you've got rising inflation in South Africa, plus you've got a strengthening currency. That's a mix for imported inflation, especially in the consumer goods section. So that's quite important for us to look forward to now. Also, looking at the stock market, we did see the stock market bump up a little bit yesterday, mainly because of some positive news. Mainly because of some positive moves that happened in copper. I was about to say Citizens Economic Empowerment, Copperbelt Energy Corporation, which actually moved up positively by 0.08%, and Puma Energy. But unfortunately, that was pushed backwards by the continuous slide in Standard Chartered shares. And therefore, the stock market is down 1.34% now year to date, mainly because of a huge Standard Chartered sell off. So it's actually lower than where it was last year at 7,239.32. That's where the index is closed. So yesterday, we did see the market close at 0.36%. It is now representing it is representing a 1.18% loss for the week, 0.25% loss on the month, and 1.34% loss year to date. So the market is in negative territory, especially because the billion kwacha stock that is Standard Chartered, which unfortunately had very bad results. It got up to 1 kwacha 30, but it's deflated all of that. All the gains from Standard Chartered in the year are pretty much vanished now. And as a stock, it is struggling. So whether the strategies of the future are going to be able to turn that stock around, that's a different situation. But it does seem that there is going to have to be a push towards that. Because right now, year to date, that stock is down 25% from where it was. Now, remember, this is one of our billion kwacha stocks. It represents quite a bit of wealth, quite a substantial bit of wealth in the market, 1.67 billion kwacha worth of wealth. And that's been wiped away. It did start the year somewhere close to 2 billion, and it's lost about a quarter of its value this year so far. So that's one of the stocks that does pull it down. Remember that when it comes to the Lusaka Stock Exchange or the Lusaka Securities Exchange, you have 21 securities on there, but really about 8 of them, which I call the Billion Kwacha Club, dominate how well those securities do. So you also have to look at it in terms of which stocks are also floated. I've floated the most shares, but currently about the 8 stocks which are over a billion kwacha in value already consume about 80. Sorry, the 8 stocks which are a billion kwacha in value already, Vernon, they're responsible for about 75% of the wealth of the stock market. So that you have to understand, they're responsible. If you remove obviously Shoprite, which is mainly Shoprite Global, I'm talking about most of the domestic companies. They're responsible for 75% of the domestic portfolio of this country in terms of the wealth that sits on the securities market. Now, we obviously did get some news about British American Tobacco, and I will be able to go through that in terms of their trading statements and also some of the rest of the results for the day. But also getting into the rest of the market in terms of the bond market, we did see it move up by 0.07%, while on US dollars it's down 0.066. Announcement did come out yesterday that we are expecting the bond auction for next week. From the central bank, which is going to be about 2.6 billion kwacha on the chopping block. All of them are reissued. Are new issues. None of them are reissues. So they're fresh issues. I have done my part when it comes to my client base, and we've done our announcement of what is expected. But obviously, that is something I do go through with clients. In other words, what are the pricing targets that they should be looking at whenever going into each bond auction? Yes, Vernon, because I prep soldiers for the battle. I send them in with war shields and guns, and they are armed with knowledge that they're going to need to use for them to actually participate in next week's auction. So the auction is coming up next
You know,
week. Closing date on Thursday. Yes, Vernon.
yeah.
Yes,
These,
Vernon.
organizations, I was looking at some of the trends that, people teach from churches, social organizations, companies. NGOs are being passed out. I
Yeah.
feel like they're trying to create their own empire at some point, you know. So you're talking about the soldiers just reminded me of that thought.
Yes, Vernon. No, because look, coaching is a very important part of society. It is now. I think a lot of the churches have recognized that they cannot just sit there and say hallelujah every Sunday. There's actual like life from Monday to Friday, Monday to Thursday, which they have to now start training you and equipping you for, which requires that the spiritual must speak to various parts. I'll talk about that one day, but that is called holistic thinking, where the spiritual side of you is in the center, but it must interact with the financial, the work side of you. Your spiritual code must lead your decisions in finance, must lead your decisions in work, must lead your decisions in family, fitness, what you read. So yes, they've understood that they've got to start coaching you in the other parts. But however, we've seen that if you're holding bonds and you're trying to hold them for as a foreign investor, unfortunately, you've lost about 9.84% on the secondary market of the bond market. But we are seeing interest rates declining, meaning that there has been buying up. But in the long term, Vernon, interest rates are actually up. Year to date, bond interest rates are up 0.93%. So we are seeing that, in other words, there has been a sell off throughout the year, but with some sporadic buy-ups that are happening. So there are these huge mega sell-offs that keep happening. Now, going into the market, we have seen that our commodity section, we saw that copper is up 0.45%. Up to 8,985, which is giving us good signs. Now, on the week and on the month, it's down. On the week, it's up 4.72%. On the month, it's down 2.34%. So it might affect the dollars that we're able to get in. And year to date, copper is up 7.32% because of that drastic sell off that was happening, especially around the banking crisis. But now, when we're looking at the oil, also yesterday took a knockdown 0.76%. 3.12% up on the week, while gold is up 1.4% and back over the 2000 mark. So gold is up 9.56% in dollars. So compounding with the actual dollar gains as well. Gold in kwacha has passed through the 42,000 kwacha mark in terms of an ounce of gold, and it's up 2.04% yesterday. In other words, gold is up 27.39% year to date, and it's up 3.3356. So your wealth insurance part of your portfolio is still the dominating part of your investment portfolio. Your bond portfolio is currently sitting at about 5% gains in the year, which is okay. While your stock portfolio is currently in the negative, especially if you're holding it according to the market weightings, that's the problem. But if you probably equal weighted it, one of the best strategies. So yeah, unfortunately, a lot of the others have not even moved yet. Sorry, we did have a little bit of a glitch there, but unfortunately, a lot of the others have not actually moved yet. So that's causing a little bit of a glitch. So how the portfolios are looking, and in terms of the wealth insurance one, Bitcoin, due to the fears of the banking sector, is up 4.8% yesterday and up 97.86% in Kwacha this year. But we're still not at the highs of Bitcoin where we were in 2020 when cryptocurrency when Bitcoin was sitting at 1 million. Okay, so Bitcoin is still 50% off its all-time highs in Kwacha. Yeah, so just remember that, people. It was at an all-time high of 1 million, over a million Kwacha per Bitcoin. We're still at 594,000. We're way far away from our all-time highs. This is why those who had those positions almost lost about 70% of their value last year. So that should also wake you up as to how volatile these things are. In the year, Bitcoin over the last 12 months, Bitcoin is still down 18%. Ethereum is down 25%, up 6.6%, but up 76% on year to date. So your wealth insurance portfolio is counteracting. This is why I said keep 5%. They're volatile enough that when they're doing well, they will counteract the losses that you experience on the market. Now, going into the economic calendar data that did come out yesterday, we did see obviously off the back of a Federal Reserve hike. Remember that we had a Bank of England rate decision that had to come in yesterday. We have sales data that's coming in today, but we had mainly a Swiss rate decision where interest rates were moved up by 50 basis points in Switzerland. That is the highest that Switzerland has had to deal with. Their Q1 rate decision has really pushed interest rates in a country that was had non-existent interest rates for a long period of time. So Swiss interest rates have not been this high for a while. I think the last time we saw Swiss interest rates in the session of about 1.5% was back in 2008. But since the financial crisis, we have not seen Switzerland hit interest rates. So that's a signal of how strong the inflation battle is, that even countries like Switzerland, who have never had to push interest rates this high for the greater part of 15 years, are now in the situation where they've had to now press their interest rates to rates where they have not been in since the global recession kicked in. We did see Turkey decide that borrowing rates don't matter; they don't need to be raised because 80% inflation is manageable. I don't know what President Erdogan is going through, but wonderful for him. But what we're also seeing as well is that Bank of England did actually make a Bank of England was actually supposed to set its decision to move to 4.25%. But here's the interesting part about the Bank of England: that two members only. They were expecting three members to actually vote to leave the rate unchanged, but seven members voted to change the rate, meaning that there is still a hawkish tilt. In other words, the Bank of England is still pushing for interest rates to go up. So that was the unexpected movement. Building permits in America rose by 15%. In other words, the housing market might be raising in terms of construction. That's good for copper. Building permits were up 1.5 million, more than what was expected last month in terms of last month's in the United States. So that strong housing market in America. Remember, there is still a housing deficit in America. They've got millions of houses in the deficit. So they are still struggling with new homes built because of harsh regulations, which unfortunately have been done by a lot of the councils, such as the San Francisco Council, the Los Angeles councils, who have made it very difficult for people to build new homes, zoning laws, permits, all these things. They've added way too much regulation and slowed down construction. Jobless claims in America did rise. So that means that the labor market is starting to weaken a little bit, and that might strengthen a bit of the outlook when it comes to the stock market, because the expectation is that a weak labor market will actually lead the Federal Reserve to lower interest rates, will then lead to boosting the stock exchange. We did also see that new home sales did decline. So that's a little bit of a weakness in the new home sales, but the building permits are actually picking up. So those are a little bit of mixed signals. Interest rates in America, in terms of the short-term ones, all came down. The bond rate was down. The 4-week bill auction did yield a 4.15% versus 4.4%. So this goes in line with what's happening in Germany, where we also saw interest rates coming down, and also the expectation of next year that interest rates will also start to come down. So the reality is that a lot of the people are looking for interest rates to start coming down sometime about next year. They're not this year because the Federal Reserve does not see interest rates coming down. Inflation in Japan dropped from 4.2% down to 3.1% in terms of core inflation. General inflation dropped from 4.3% to 3.3%, giving the Japanese central bank less incentive to ever consider adjusting rates upwards. They have experienced an improvement in their manufacturing sector, though it's still in the negative, but their service sector is still the faster growing of them all. So what we're seeing then, Vernon, in terms of us taking a step back, industrial is getting a little bit stronger, though not too strong. Growth is still weak. Interest rates are starting to come down a little bit, though central banks are still pushing them up. And inflation pressure is sticky. It's not moving upwards. It's just coming down at a slower pace. So there is some positive outlook. So if you're looking at your portfolio, imported inflation that we're going to be getting in may not be as strong as we thought, because we are also seeing oil start to tumble a little bit. Thank goodness that's actually starting to happen. And we are also seeing inflation from the global supply chains also starting to come down a bit. The oil is still holding at about 75. So oil has consistently held below 80 around these last few months, though gold, I think, has come back down to 19 as the morning trade came in. Gold has dropped by a little bit. To come down to 1,900, though it did touch over 2,000 at the end of last night. Copper is still one of the strongest parts, and copper rallying as much as it does is speaking to industrial recovery and also the recovery of China. Okay, now data we're going to be looking at today. The data we're going to be looking at today, we've got retail sales coming out of the UK early this morning. We've got Spanish GDP expected to come out, with composite PMIs coming out of Germany, PMIs coming out of Europe, PMIs coming out of Britain. These are revised PMIs that we're going to be looking at as well. We're also going to be looking at economic activity coming from the emerging markets such as Mexico, to see how that's actually affecting the emerging markets' economic activity generally. That's also going to speak to how countries like Zambia can be doing. We're also going to be looking also at manufacturing PMIs coming out of the US. So PMIs out of the EU, US, Germany, Spain. Those are all going to show us how the industrial sector is going to be closing out today. So that's our data for the week, Vernon, and how markets are looking. Please prep yourself. Bond auctions are coming up. Stock market data is coming in. First thing, however, to talk about the stock market, Vernon, is the news that came out of British American Tobacco yesterday. That's our first deep dive. BAT stocks, BATZ stocks, which is symbolized by the ticker BATZ, did come out yesterday. The results did come out for the end of year, citing this. The company hereby shares with shareholders that earnings per share and headline earnings for the financial year ending 31st December 2022 are expected to be approximately 47% higher, Vernon, not lower, higher than the financial year ending 2021. British American Tobacco obviously is a supplier of cigarettes into the economy. So those of us who are indulging in the chakolua side of life possibly also tend to be in this side of the spectrum. The smokers, it's the same. It's the same groups of society. Of course, obviously, this is one of the health risks. Remember, we talked about it with alcohol. Remember, one of these, the growing health risks are also in respiratory issues as well. Though I think that is the TB side is starting to come down because treatments have improved. However, the movement of in profitability is attributable to the improvement in the volume performance. In other words, brothers are smoking more. So that's the first thing, and I think, and I'm picking my words correctly because 75% of cigarette smoking in Zambia is done by men. Okay, 75% of
Yeah.
cigarette consumption, just like we are responsible for 80% of all the alcohol consumed, 75% of all the cigarettes smoked in Zambia is done by men. The improvement was driven by the product availability following the investments made in machinery. Additionally, the company benefited from exchange rate gains in the first half of the year, resulted in more savings on the cost base. So the things that it had to import, it did not have to deal with anymore. So British American Tobacco finances should actually be looking far better in terms of the year. Now, if you're even looking at 2021, and I'm going to read the trading statement from 2021 to show you that this is a consecutive boost that's actually happening. This is not a single situation that is happening. This is consecutive because last year they also reported a 327% hike in earnings per share. So this is a follow up. You've actually seen that the magnitudes of growth, obviously, in the years have followed up, and they also talked about the same thing. This was due to an optimal pricing strategy. So they priced things upwards last year, and they also improved sales. So even though the prices increased, brothers still smoked more. But obviously, it's because we don't have strong levels of syntax, wink, wink, honk, honk, that we should be looking at in our country. Then people might be afraid that. And if you tax cigarettes too much, guys will just switch to chamba. That's what they're worried about. The worry is that guys will just switch to chamba all of a sudden. But there is a little
When you
bit of a
speak about
change.
smoking,
Yeah.
when you speak about smoking, shisha, I don't know if that.
Now that could be a threat, but remember that shisha is more of an up-class product. Okay, it's not readily available. It's not a stick that a person can buy for a kwacha or just two. Okay, shisha is a product that somebody has to engage in who has a little bit more middle-class buying power. So it does not speak to a broad base like these other ones do. You know, these are divisible products that can permeate into the lower income sections of society. We do have a question here regarding, I think, the last section that we talked about in terms of the bond market. And it does says, please explain simply why do bond Thank you very much. Why do bond prices go up when yields drop? My expectation is that as yields drop, then less people will buy, leading to a drop in prices to encourage more participation. Does this defy the law of supply and demand, where the prices will go up when yields drop? Okay, so I'm going to quickly explain the dynamics of the bond market. What is the yield? It's like the interest rate, and the interest rate is defined by how much now. I'm going to have to give a quick bond lesson here. When you invest in a government bond, in other words, debt, a single bond, and I want everyone to understand it from this perspective. A single bond is the government paying you, is a contract for the government to pay you back 1,000 kwacha. So if you buy 5 bonds, you've made the government pay you back 5,000 kwacha. Okay, so how much have you had to loan them now for them to be able to pay you 5,000 kwacha back or 1,000 kwacha back at a future rate? Okay, now the yield is made up of two components. What interest is the government going to be paying you on a monthly, on a semi-annual basis? That's called a coupon. And then how much is the difference between what they paid you and how much? What is the difference between what they paid you and what you borrowed them? That's part of the yield, what you earn. Okay, because think about yield like farming. When you plant, the yield is what comes out more than what you earn, and more than what you planted. So why do bond yields go, why do when yields go down, prices go up? It simply signals that the part that they pay, that coupon component, that is fixed. Okay, that is a fixed amount, that is a fixed percentage, so that's not changing. The part that changes is the price. Okay, so in other words, the higher the price, the less profit you'll make on your money. All right, so I want everyone to recognize this, because you lend the government less money than they're going to repay you back in the future. So the higher the amount you have to lend them for that future repayment, the less profit. So your yield comprises of your profit that you're making on your bond plus the coupon that you're being paid together. Okay, so the higher the price, the lower the yield. So it's not that they're actually reflecting the same thing. It's just in different wording, because the price is what you have to invest when you're doing it. So that is the explanation as to why bond yields move down. So it's not really a supply demand. So the main thing you're seeing on the supply demand spectrum is actually the price of the yield. So whenever people are selling their bonds, okay, it means that the profits are increasing per bond. In other words, the distance between what you buy and what you get repaid back. So think about it like houses. I want you to think about it like a house. Imagine, Vernon, you've got a house that somebody in the future said, Vernon, whoever owns this house, I'm going to pay them 500,000 kwacha. But then the current owner of the house says, I should have 400,000 for it now, but you know what? I need the cash. So Vernon, I'm going to give you the house for 350. So in other words, the profit you're going to make when that house gets sold for 500,000 is bigger than the 400,000 was valued at now, but you're now getting that 150. That's the full profit. So the yield is comprised. So I think you have to
Mhm.
understand what makes up the yield is the coupon you get paid plus the discount. So that's why when the prices go up, it shrinks the discount, okay, or it shrinks the premium that you're going to get or the profit you're going to make on that bond. It shrinks it, and therefore it pulls down the yield. So I hopefully that explains. I know that I do bond lessons for a reason, but yes, these are questions that need to be asked and answered, and I'm always willing to answer those questions when it comes to it. So those of you who are engaging in it, it's not really a supply and demand deficiency. More than the bond and the yield are actually reflecting the same thing. So when the price changes, it actually automatically changes the yield because the yield reflects the price and the coupon combined. Right. I was going through the tobacco industry in terms of it yesterday. Now today, I also want to go through some of the data in the stock market for those of you who are starting to pick your stocks. So this is some of the data of how the market has actually gone in terms of value investing. Now there are six principles, Vernon, of value investing. When a stock is valuable for you to invest in on the stock market, it must adhere to six principles according to Benjamin Graham, who is, as I talked about, the guru of Warren Buffett, the guy who actually trained Warren Buffett, his mentor. And Benjamin Graham's six principles are: the profits must be growing, it must be fair priced, it must be paying a dividend, the debt must be able to be covered by the assets, the current assets should be able to be covered by the assets 1.25 times, and also the price to book value ratio should not be bigger than 3 times. In other words, the price should not be bigger than the net asset valuation of the company 3 times. So what we're also seeing, Vernon, here is that 75% of companies did experience a profit growth. 66% of companies are fair valued. In other words, their price to earnings ratio is good. 33% of companies have declared a dividend so far. We're waiting for some announcements. Remember, there's AGM still happening. 75% of dividends have actually, 75% of companies have got enough assets to cover their debt. That's a good situation. Current assets in terms of the company, only about 50% So 50% of the ones that reported, not the ones, not all of them together, but 50% of the ones that reported so far. And we're looking also at price to book value. 91% of companies on the stock market or who reported, out of the 17 companies that reported, 91% of them are in a good situation where they're not overpriced. So you've got fair priced stocks. Okay, that's something you must work out. You've got actually fair priced stocks. So the market is currently fair valued. So you're looking for growth stocks. So you're not going to find many underpriced stocks, but you're going to find a lot of companies which are in growth posture. Okay, which have got good growth outlook. So that's what you should be looking at. Dividend paying stocks which have got good growth opportunities is what we should be talking about going into the market. So the value of the market is actually right priced. It's not overpriced like it was for a period of time. It's not underpriced like it was back in 2020 that led to that surge in the market. This is why it's having trouble breaking out. This is why decent results in some companies are not leading to breakouts in the stock prices, because the stock prices are fair value. They're fair priced. Also, the liquidity of the market may also impact it as well. Our market is not as strong in terms of liquidity, which we have been trying to improve in terms of market participation of the lower rungs of the economy, or the smaller traders, the retail traders. That Vernon slows down what we're talking about in terms of market activity. Now, on the other side of things, today, Vernon, I wanted to talk about the conversation we had yesterday regarding entrepreneurship. I'm going to show two charts. Yeah, our chart from yesterday, which talked about entrepreneurship in Zambia in terms of the participation by gender and by age group. And if you're taking a look at this, you'll see that the strongest participants in entrepreneurship is still the men. Men make up close to about 70% of entrepreneurs. But if you look there, young men 35 and above make up 93,000 of the 210,000 entrepreneurs as of 2021. And you can see the growth has been particular in the various routes. But I want to talk about, just in general, Vernon, what has the prevalence amongst adults in terms of entrepreneurship in Zambia been? Because that's a key and critical statistic we need to look at. Now, historically, Zambia has had a very poor entrepreneurship uptake. We had a rate of only 0.3%. Now, remember, I'm defining entrepreneurship, people, as people who create businesses which employ more than one person. Okay? People who create businesses that employ more than one person. If you just employs yourself, you are self-employed. Okay? So we're differentiating between that. Entrepreneurs are people who create businesses that create employment. And if you take a look here, Vernon, this is actually quite interesting. We've gone from, in 2012, where entrepreneurs were making up 0.3% of the adult population, okay, to now they're making up close to, and now the black bar is the all adult population. And the all adult population is now showing that we've gone from 0.3% back in 2012 to 2.5%. And those are healthy numbers, by the way. 2.5% of the population being employers actually means that we're actually getting to a place where we're tightening our labor market. This, Vernon, is the statistic we need to work on. If we can get this statistic to where it is in Egypt, in fact, in Egypt, I think the number is as high as 10%. 1 in 10 people in Egypt is an entrepreneur. And in Switzerland, it's 1 in 12. Okay, Switzerland was notorious for having one of the tightest labor markets, because 1 in 12 Swiss people runs a business that hires people, and therefore the availability of labor is small. So, Vernon, what determines your pay as a person? What determines your salary as a person is how difficult you are to replace. So when there are many employers fighting for few employees, then you can actually start to get a higher wage rate. So we are prepping the grounds here. So this is why I think the radical entrepreneur Dumisani Ngube says entrepreneurs are our national assets that must be nurtured. And this is why. If you want to improve the salaries of society, you need to grow the base of entrepreneurs. So people who are running businesses need to experience growth. So I think what unfortunately the slowdown in Zambia is this, that our entrepreneurs are not able to absorb, because they're kind of peaking at very small business levels. So they're not able to hire as many. One, because access to markets and clients. That is the first and primary reason. They need to access to be able to get to more clients than they should be. And two, because of obviously access to capital is then prohibiting their ability to capitalize on any access to clients, and it's slowing them down. And then obviously the regulatory framework slows these business down. When you start to get calls from your regulators for this and that, and not just your regulators, your business administrators, all sorts of things that do slow down growth of a lot of these small business enterprises. So that is the growth. Now, I'm going to look also at if we're looking from 2017, we've seen that if we're looking since from 2017, we've seen that the participation of adult entrepreneurs, in other words, middle age, 35 to 64, has gone from 2.2% to 3.2% as of 2021. But amongst the youth of Zambia, I think this is also an admirable number. It's more than doubled. The prevalence of entrepreneurs amongst Zambian youth between years of 20 to 35 has gone from 0.8% in 2017 to 1.8% in 2021. We're still waiting for 2022 data from the Labor Force Survey, but these are promising signs, Vernon. And this is what we have to nurture. It is up to the next administrations and leaders to nurture this, okay? To make sure that they do not start putting in place measures that kill the ability of people to create employment. Because these are not just people creating employment for themselves, Vernon. It is greater to give. It is more blessed to give than to receive, Vernon. These are people who are creating employment for others, okay? And before, what we had was a problem where only 3 out of every 1,000 Zambians was creating employment. Now we have 1 in every 40 Zambian adults. That's a very big improvement. That's a sociological change as well. Society has accepted entrepreneurship as important. It's no longer looked down on. Your parents are no longer giving you speeches saying, "What is all this business stuff you're trying to do? Why are you talking about running a business?" You are now being respected and revered for it in society. So it is a good thing what we're seeing in terms of entrepreneurial growth in society in Zambia. So that's something that we also need to start seeing in our country. We'll be taking some of the questions, especially towards the end. So keep putting your questions in. We will take them towards the end of the show. So all of you who are actually putting them in, please do so, especially those who are trying to figure out how to navigate the investment cycle for what's in terms of bonds. But I just wanted to put that out there that entrepreneurially, the country is changing. And therefore, we also have to embrace other changes that are happening in society. So, Vernon, I'm going to start today's conversation with our quote of the day, because I usually put our quote of the day at the end, but I'm going to now have to put it at the beginning. And here is the quote of the day by Mr. Jeff Livingston, author and president of Technacity Media 5 in America. And this came from the Pew Research Center. Let me just put that up for everyone. And he says the following: I see the movement towards artificial intelligence and robotics as evolutionary, in a large part because it is such a sociological leap. The technology may be ready, but we are not, at least not yet. Now, it is important to understand what he's talking about there. That technological changes in society, in the way we do business, is big because it affects society. Now, there was a conversation by a man named Dr. Juwanza Kunjufu, and I've cited this multiple times, where he talks about how the economy changes the family and how each family setup is suited to the economy. And he talked about how the farm sector economy was actually affected by, so how the farm sector economy actually affected the need for big families, for large families. So people wanted large families because they were operating in the farm sector. He said when we got to the industrial sector, we went to medium-sized families, and that was also important. So nuclear families, father working in the factory, mother tending to the children, because women obviously were not suited for the back-breaking labor of a steel factory, for example. Those are some of the things that you should actually look at in society. Then he then went on to talk about how the knowledge economy and the computer economy has allowed for the single parent household to thrive, because you can now work from your desk, you can now work service hours, your hours are less strenuous physically. So therefore, somewhere along the lines, the family is changing. So people need to understand the two biggest changes in any society, whenever you're planning a business, should always be social changes, cultural changes, in other words, the way people behave and the things that they do, and social changes, the things that the technology that they're utilizing. Okay, so that is the quote of the day that I wanted to give. That it is going to affect, because it's getting into, Vernon, our deep dive today. What are we talking about in terms of the deep dive of the day? And the deep dive of the day, Vernon, is going to be jobs of the future. And remember, we talked about planning your money so that you can plant your future. So let me ask you a question, Vernon, before I get up to the next thing to share. What do you think the work of the future is going to entail?
I think we'll be looking at more of robots or machines taking over human jobs or human positions, and that should not take because already um, we are slowly and but surely getting to an information age, and if a computer can process and accurately provide information in a millisecond as compared to a human being who has to process and think for a second, uh, I'm positive that one who's running a business would definitely opt to just have more robots working and doing the work as compared to a human being who has to be paid, who has to be fed, who needs an office space, who will need a desk, who will need transportation. But for the robots, you don't need transportation. They are stationed in the very same workspace. They will not need a table or a desk. So it's also less costly as compared to having a human being who you will have to pay at the end of the month and have all of those aspects. So I feel in future we should look at we should prepare ourselves, for an age where robots will be taking more space, and looking forward to really how we can make ourselves still relevant in an information age. And I think information is something that will be more staying, I think, in the days to come. Seeing how we can position ourselves for that as well.
So here's a quote from a gentleman named Dr. Cal Newport, and we went through his book earlier at the beginning of this week. This is from his other book. This is a quote from his other book called Deep Work. And I came across it, and it spooked me how correct it is. But the book did come out in 2016, so it's not really off. He's a computer scientist, but he does talk about our connection with technology. And he said this. He said the unprecedented growth and impact of technology is creating a massive restructuring of our economy. In the new economy, three groups of people have a particular advantage. So here are the people. So, in other words, plan the future. Which one of these three are the ones that you would be? One, those who can work well and creatively with intelligent machines, manipulators of machines, people who are very good with technology, okay, that they can create strong outcomes with them. Two, the superstars, the people who can do what they do better than anyone else, okay, the top of their field, the highest of quality. And three, the owners, those who own capital that is going to be investing in the technology that will dominate the future. And these are the three groups of people that are going to literally dominate in that field. And I'm going to talk about why each of them is dominating. Obviously, intelligent machines, Vernon, somebody will have to operate them. So you can either choose to be the victim of automation, or you can choose to be the master of automation in your field. And I'm going to give you a simple example. Here in the music industry in Zambia, I think 20, 30 years ago, Vernon, back when I was going to say back when you were young, but that's what back when I was young. But back when I was young, the music industry in general,
Yeah.
most of the time, the people who dominated music production were people who played instruments. Okay, the people who played instruments, the people who played the piano, the people who were trained in these areas, they were the ones who were actually dominating when it came to it. Today, it's no longer that. It's the guys who can DJ, who can use technology, by the way, when they're DJing. And production is now dominated by kids with computers who are making beats on software. So we've gone from instruments, people having to master instruments that can make melodic sound, to software that synthesizes those instruments. And these kids are able to produce music based on synthesizing. Now they can integrate certain people. So it's the ones obviously who have mastered both instruments and software who are now supreme in society in terms of the music production industry. But I'm giving you that as an example. What do you think has happened to those zealots who just believe in only instruments and no software. What do you think has happened to those people?
Of
They've
course,
been wiped
they are
out.
slowly being rendered. Yeah,
Yeah, in the production sector. So that's an example here. If you're looking at technology, you're seeing the mobile sector, the mobile money sector outpacing the conventional banking sector. So the banks that have embraced mobile money and have integrated very well with it and are offering things similar to it, they're growing the fastest. The banks that have adopted the agency modeling, the banks that have adopted technology, network technology that allows them to have multiple agents rather than running a select group of branches. So those banks that are relying on we have branches versus those banks that are saying we have agents and then we've deployed network technology and mobile applications, who do you think is winning the race now?
absolutely. Those guys who are trying to integrate us with the world of technology, of course.
Exactly. Banks that are offering applications and technology are the ones that are dominating the race now. They're digitizing, decentralizing, and probably democratizing their product offerings to go with the future. So you have to be skilled in your business and your ways of work. You must be skilled with using technology. If you fail to use technology, you'll end up thinking that everyone is only listening on radio frequencies and forgetting there's a social media audience that you should actually be tapping into, and that Zambians are transitioning. What do you think has happened to the newspaper world, Vernon? People used to think that printing newspapers is always going to be the business forever. We've gone from 20 to 30% of society reading newspapers down to 2%. Okay. When's the last Vernon, when's the last time you held a physical
It's bad.
newspaper in your hand? When's the when's the last time you held a physical newspaper?
I
Just
can't
be
remember.
honest, right?
I
You
don't
know, I haven't
remember
held
last
one.
time I held a
Haven't
news.
held one in years. I haven't held one in years.
It's
I mean,
reasonable.
honestly, I haven't held it,
All the news is on our phones. It's very reasonable.
and it's on social media too. It's being disseminated through social
Mhm.
media. So the reality is, those who are not moving with technology are getting eradicated, and it's happening in there. So if you don't know how to use technology, the second thing you can be is the best at what you do. Okay, and what they're saying is that in a world which is going to be borderless, where we can work online. Okay, I'm here in Chilanga. I could be in South Africa by now if I wanted to, and we could still be doing this show. I could be in Kenya, and we could still be doing this show. People now have access to more talent pools. Employers can access more talent, so therefore they start to pick the best. Service providers can access more talent. If you switch on Spotify, you're no longer restricted to the music of your economy. You're no longer restricted to
Yeah.
that. You can now listen to global music just by switching on Spotify. And therefore, you're going to gravitate towards the best in the world as opposed to the best on radio. Because we can restrict what's played on radio legally. We can restrict how much is being sold in record stores. We can do that. We can actually refine it to favor the local music industry, but you can't restrict what's happening on Spotify. So the reality is that you're no longer restricted to what corporations are telling you. This change is allowing you to now access streaming services everywhere. It's no longer dictated to you by music companies and selling companies. It's now being given to you by companies, by access to the best. So what's happening now is when you're the superstar of your field, now more people are coming to you, whether it's books, whether it's works, whether it's applications. Before Vernon, you could be restricted to only using accounting services from within your country. Now you can get an accounting app which is global. You can buy a global accounting app for just a couple of hundred kwacha a month. These are options to you now. Okay, so almost everyone is now competing at a global level. So what most have to understand is that talent has become global and you must be at the top of your field. So you must sharpen your axe to there. This is why I keep telling people specialize and become very good at what you do. Specialize and keep updating. Keep up with the latest research, the latest trends, everything. Keep updating yourself. Because if you don't, you're gonna fall away, and people are now gonna start relying on other people. They're gonna start relying on other people. The other people who are going to win are going to be the people who own capital. So if you're not the best at what you do, and if you haven't mastered technology, you better master money, because mastering money is going to be very important in generating a living going into the future. So you got three things you must master. You must master technology, you must master your craft, and you must master money. If you master one of these three things very well, or at least a combination of them, you will probably thrive in the digitally divided economy that's coming up very soon. Don't think it's not coming to Zambia. It actually is. Because one of the problems I think most people think is, now that the eastern countries, not Chipata, I'm talking about east in terms of the I'm talking about the eastern countries in terms of Asia. Now that the eastern countries are actually evolving into where they've gotten higher wages, Africa has been under the assumption that a lot of the production from Asia is going to come to Africa. We are sadly mistaken, because Asia has done something to retain that production there. Even though their wages have gone up, Asians have done something even bigger. Asians have built robots. This is a chart, Vernon, of the most dense robot usage across the world. Okay. And I'm going to zoom in quickly here. But if you see, this is called robot density. If you look at the countries here that are at the top of this robot density line, okay, if you look at the main countries, Korea, where a lot of your production of electronics is done, Singapore, Japan, and Germany, these are strong production economies, and they are using a lot of robots. This is the amount of robots used per 10,000 people. So almost one for every 10 workers in Korea, there is a robot at work. Okay, so that means that they have 24-hour production happening. All right, that is the thing. Without people coming to work, so they've managed to keep things cheap because they've invested heavily in mechanization. Unfortunately, Africans, what we do is when we make money, we don't invest in automation. When we make money, we decide that we're going to go flashing. That's the problem. We get flashy. We don't invest in the technology of our things, but we get flashy. So that's a risk that Africa may not absorb the manufacturing that we thought we would. Because what happened was, when labor was cheap in America, when labor got expensive, it shifted to Asia. When it got expensive in Asia, it's then supposed to shift to Africa. But that shift to Africa is failing because Asia has invested in automation and technology to keep its production costs cheap. And as a result, Vernon, one of the things we're walking into in society is this graph right here, where we are seeing, and just very quickly, where we are seeing that human and technology is starting to get deeper and deeper together. Now it's saying that in 2020, 1/3 of the work was being done by technology. By 2025, almost half of the work will be done by technology. Okay? And what's happening to people is we're struggling in areas of things like memory retention. We're not retaining memories. People are remembering things less, Vernon, because they use calculators and they use Google searches. So whenever somebody wants to remember something, they Google it instead of remembering it. So we're using our brains less. So memory retention and memory usage. Do you know that the attention span of the attention span of a person has actually dropped? In other words, the attention span is how long does it take for me to get your attention. The attention span of a person has actually dropped from 12 seconds it takes me to get your attention now down to 8 seconds. Human beings have got the attention span less than a goldfish. Okay, less than a goldfish which is stuck in a bowl because it forgets everything. And now our storage capacity is still okay, but our memory, our attention capabilities are declining. And we're also looking at even memory retention rates are also starting to slow down because we're using too much technology for thinking. We are dependent on these things, Vernon. These things right here, we are dependent on them. Okay, when we look through this thing for thinking, we look for it to calculate, we look for it to talk to us. So the question is this phone a thing anymore, or is it an extension of us? It's an externalization of us. And this is what it's becoming. And a lot more people are becoming one with their device to the point where they're indistinguishable from their device. And in fact, the device is the smarter part of them. Their brain has left their head and it's gone into a phone, okay, which is doing all the work. So therefore, Vernon, the
So,
less
just
useful, pardon,
would you say we put these things away? I don't know. Are you referring that we put them away?
I'm saying slow down on the use.
Because
No, seriously, slow down on the use.
it's really making us less productive.
People can't do mental math anymore. There's a reason, Vernon, why Silicon Valley parents, the people who work at the tech companies and these phone companies, there's a reason why they send their children to school with no technology. You know that they send their schools to they send their children because they realize technologies can actually be detrimental because it can create a dependency on the technology where a child may not be able to think on their own, and therefore the creativity part of them, the ability to do deep work, okay, the ability to go deep into a topic and actually understand it, expand on it, become the best at your field. Remember, I said you have to be the best at your field and you must master technology. You can't master technology if you are dependent on it. You can't, because then you can't creatively use it. You can't manipulate the data streams that come out of it. You're depending on it to think, and it's limited by your inputs. So if you're not reprogramming it, then it's not going to give you the best. You are just outputting from it. And the second thing is, if you want to master your craft and keep up with things, you must be ultra creative. Now, to be ultra creative, you need to go deep into things, meaning your brain has to create new pathways. So, yes, in as much as technology is an important part of being productive, but you cannot be ultra productive and creative if you are dependent on technology. This is where the problem is. We are dependent on it. And if this stuff goes away, we can't think, we can't remember, we can't do. So, this is why it's important to keep some of your parts of your life analog. Okay, keep some parts of your life analog. I'm not saying we shouldn't have digital dispenser. I believe in it. I'm bringing technology to my field. I'm working where I'm trying to use a lot of technology. But in terms of my brain development and my brain work, I still use pen and paper in some sorts because I need to work my brain. Okay, and the more I work machines, the less I work my brain. Sometimes I actually, by the way, I've actually locked this thing. By the way, I've locked this thing where what's it? I can't access things like social media for except I think between 7 and 9 and 10. They're like I've given myself 2 hour slots where I can do this, and on weekdays I've actually had to block it. So you also have to put restraints. I would advise you to maybe look at something called digital minimalism. It is where they're trying to say use technology as a tool, do not integrate with it. Okay, that is a key thing. Sorry, Vernon, there was one question that we have given here, which we need to look at. But I am telling people to prep themselves for the future. Brishas Walia has said, is there always a way you can invest a fixed amount in bonds, or an amount is always dependent on the or during the auction? I ask because I want to bid. Always get a discount. I think I'm behind in a part. Uh, I do say this in a lot of classes that I do, people. But I have stated that yes, you should be investing regularly. With bonds, you have to make the decision to do it regularly. Set an amount. This is why sitting with an advisor who will tell you how much you should be investing every single month, and therefore you can get on a plan and just start going to each auction. But yes, you have to do it. You can't automate it. You get a discount because that discount is part of your earnings. Okay, so you buy the bond for less than it's going to pay you back because that discount is part of your earnings. So that difference between what you paid and what you get paid back when it matures is actually your earnings plus the coupons that you are being paid. So there is a way to invest an amount regularly. So Vernon, just to finally put that down, I really did have to stress this point because as we're embracing entrepreneurship, and as we're seeing changes in the social strata of things, in other words, women are getting into the workforce at stronger rates, earning as much as men. Marriage rates are going to decline, Vernon, where 25 to 29-year-old boys are 50% going to be unmarried by the year 2050. Okay, and not sort and not even unmarried, never been married. Okay, bachelors. They're going to be bachelors by 2050, while we're currently only looking at about 30%. So we're moving from we're moving to very high numbers here in society. There are going to be a lot of social changes that come with this. If you want to win the economy of the future, the same way you're planning your money, invest in yourself by also disconnecting a few times, unplugging sometimes. I'm not saying all the time. Do not become an anti-technology person. That's not what I'm preaching here, people. Me, I tell people to use technology, but don't become one with technology. That is dangerous. Don't become dependent on Google search for everything. Remember some things. Build a second brain and build better memory retention so that you can think and create. Because if you can't retain information, you can't create new things. And the value you will bring is either to perform at an elite level, create new things, or manipulate data and information. If you can't do that, you are going to struggle and we're going to have an unemployment problem, especially Vernon. the young men of society who do a lot of repetitive work. Those are the ones who are going to struggle a lot. That, Vernon, I have to try and hold it off because that is my futuristic Friday. That's my thought for the future, where the young Zambians have to think about it, especially with the trends coming up in technology. So we're trying to have the conversation that's going to affect young Zambia. But let's see if they're receptive to it. That's a different story. With that, I wish you well and have a good week, my brother.